Welcome back, everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets. Euro dollar dumping fast, but is it just a retrace or the start of a bigger breakdown? Retail sales beating expectations. Euro dollar hit 117.50, and traders were watching the 118.30 level, but that has turned down with tariffs heating up and central bank divergence. The pair could be in for a deeper retrace. So let's break it all down for you, okay? We're starting off with the euro dollars trading right now around what, 116.90, off the high of the day of say 117.41. We had an interesting point up in this area. I got to find the chart, but I'll show you the point that I had. I think I had 117.45 yesterday. Had to hold. And that was a great break point. Now, the 117.13 is an important resistance level. If we look over at the U.S. dollar index, the U.S. dollar index is starting to recover, and that's what basically caused the euro dollar fall. Now, that is occurring through dollar yen. Dollar yen has continued its rally to 147 almost. Sterling yen back up 199.09, euro yen 170, 178. So dollar yen is carrying the crosses up. Euro dollar is under some pressure, so is sterling dollar. So the Eurozone retail sales beat many expectations. They came in stronger than expected. That gave the euro a lift during Asian hours, sending it right to that 117, say 50 zone. But U.S. trade talks, they need to see the market needs to see some positive developments to boost confidence, while the U.S. tariff threats are keeping the volatility high in the euro. So right now, as we stand, we got on the 2-hour chart, we have support that was slightly pierced at 116.86. It's coming back up a little bit. If you're a short-term trader, you really want to see the break of this close right here, 117.21, to show that it's got some potential to come back up to, I would say, up to this area, 117.80. Let's look at the euro dollar actually right here. Looking at a fib retracement level, we're right at the 0.382. If we spike down twice and close below, we're heading down towards the 116, the figure level, the 0.618 retracement. I don't trade this, straight. I trade it through the cross. The cross has caught a bid. Euro yen has caught a bid. And sterling yen has caught a bid. As a matter of fact, sterling's recovering a little bit off of the lows. I'm watching that right now. So that's actually driving sterling yen right now up to 199.15. So the crosses are on fire because of dollar yen's volatility. Now, in the euro itself, central bank divergence. ECB recently cut the rates, right? 2%. Now, while the Fed is still holding at 4.25 to 4.5, though the overall Fed commissioners have signaled potential rate cuts later this year, the divergence is keeping the traders on edge. I mean, really, Trump wants that rate to be cut. He's been talking about firing Powell. He's been trying to put pressure on him. He actually wrote him a personal letter saying you're costing the U.S., trillions of dollars by keeping this rate where it is. But, Powell's independent, and he's going to do what he wants to do, right? So the Middle East ceasefire helped risk sentiment, but any reversal there could push traders right back into the safe haven of the U.S. dollar, also causing the euro to further decline. So let's talk immediate resistance. Immediate overall resistance right now sits right here at 118.30. I told you it was going to be tough to get through that point. That's the July 1st peak that we have. Above that, we got 2018 highs at 118.50 if we can get through it. If we can't, we're slowly going down. Support sits right now. If you want to look at the overall moving average, a 55-day moving average, it's right around 114.30, followed by deeper levels at 112 and 110.64. Now this is really going out of total meltdown. I don't think we're having a total meltdown right now. I think that the euro dollar itself is tracking in between this 0.382 and this high right here. I think this is what we're tracking at. Now, a movement down here with 2 moves down, okay, would trigger towards that 1.618. If you are a Euro bull, as I said, right now, for me, if I was going to buy the thing, I would wait till it calms down, okay, and I would look for a reversal. Let me get rid of this guy right here. I would look for a reversal right up at this bars close, 117.21. Now, I wouldn't just buy it. I'd wait to see how far up we could go, and then I would buy it on a retrace. Where would my stop be? It would be below this point right here, 116.82. If I'm looking to sell it, I'm looking to actually start to sell retraces back up, like 117.13, 117.20. Like I said, it's the same point for the reversal up. So if you're a bear, you might want to try to sell 117.20, or if we get 2 consecutive lows. Let me get my little, that's not what I want. I want this guy here. Where is it? I just learned how to use this path. So what I'd want to see if I am a bear, I want to see it come back up to like 117.20ish, get rejected, come down, create a low, and then create another low lower than that. Hang on, right here. So 2 consecutive lows. Let me get an arrow. Like this, another low. That would actually be showing me that I could sell it on a retrace again up to this fib level and look to pop down to 116 the figure, 115.80 or so, like that, just like that. All right, let me move my fib back where it should be so it's correct. There's my fib level. Here's the 0.382 that we're sitting on like right now. So that's what it stands in the euro. If you like what you see, please like and subscribe. Check out in the description of the video below. You get yourself a free ebook and video series. Look forward to seeing you in tomorrow's video. And remember, always as a short-term trader, enjoy the party, but dance near the door. Cheers.